Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. The dollar and silver are two very different things, right? The dollar is based off of faith. It's based off of how much people think it's worth, but silver has intrinsic value. So, when we're talking about the silver versus dollar, it's two very different markets. When the dollar index is higher, gold and silver usually goes lower. When the dollar index is lower, gold and silver usually go higher. It's almost a direct opposite correlation to each other. So when we're looking at these articles, you got to keep in mind the dollar has lost 98% of its purchasing power. It's the most liquid currency. It's the most liquid asset you can have. It's how you provide for food, water, and shelter. But if you're looking to hedge against inflation, if you're looking to preserve your wealth, gold and silver is the answer. More specifically, silver, and that's why the second article focuses on silver. So before we start, make sure to smash that like button. Make sure you subscribe if you're new. I post daily videos every single day. I'm giving you the newest, latest, freshest, most up-to-date recent information in the world of precious metals. So if you enjoy these videos, make sure to smash the like button. It's the best way to support the channel. Let's jump into this article. Over the last 50 years, there have been virtually no significant silver rallies during a period when the US dollar index has been rising. If you are betting on a massive silver rally while US dollar strength continues, then you have a very low probability of success. Similarly, if you bet on a massive silver rally while the US dollar continues long decline, then you have a great chance of success. So, for the silver investor, what the US dollar index might do over the coming years is a very important question to answer. There have been two significant silver rallies in the last 50 years, marked out the rectangles on the chart below. Both silver rallies is when the dollar index was in a serious decline, right? Just like I explained in the beginning of the video. The chart above shows the US dollar index versus the price of silver chart. On the chart, I have marked two patterns, 1 to 4, that could potentially be similar and exist in similar contexts. If the second pattern continues to follow the first, then the US dollar index will rally significantly over the coming years and months. If the pattern diverges from around this area, then the US dollar index could suffer a significant decline to the 0.1 area, maybe even lower. One of the biggest problems with a bullish case for the US dollar index is, of course, the recent enormous monetary stimulus. History shows the US dollar index is very likely to be weak after such record stimulus. This is despite the big stimulus by other big nations. The index could move sideways in the best case scenario for the strong dollar, but is very unlikely to make higher highs. Another big problem is time. If the US dollar index is to move higher than the black line, it would be established the longest bull market for the US dollar index since Nixon took the US and the gold standard. This, in my opinion, makes the US dollar index rally very unlikely, which means higher gold and silver prices. Despite these reasons and more, there are many that have the expectation that the US dollar will continue higher, especially given the current economic distress and the massive deflationary pressures that it created, and with good reason, I would say. This then sets up the ultimate standoff in the market, where the resolution would be huge when it actually happens. Either way, this kind of reaction I would expect silver to have in any case, in a proper bull market, not a slow gradual rise, but a very violent move higher. The standoff is exactly manifested on the silver chart, the next big move, and it is coming soon. We are exactly in terrain that is conducive to massive silver rallies. So wow, very bullish article. This is definitely true. The dollar is basically based off of faith. It's based off of how much people want it to be, and they want you to they want you to be a slave to the dollar. If you're in debt, you're a slave to the system. They can control you. That's what they want. It's a power move. Keep that in mind. So now let's jump into the next article. This article will be in the description as well. So, industrial metals such as copper started the week on a firm footing, reaching a 7-week high before retracing lower. Silver, meanwhile, has followed more or less the same recovery trajectory since hitting multi-year lows in March. We take a closer look at the current drivers impacting both metals and what may lie in store over the coming weeks. So, industrial metals industrial metals such as copper started the week on firm footing, reaching 7-week highs before retracing lower. Just like crude oil and growth in demand and dependent commodities, it has now established an uptrend with rising prices as easing lockdown support a pickup in demand. Adding to this, multiple initiatives from governments and central banks have all helped improve the sentiment among growth-dependent commodities. This despite facing the biggest slump in global growth and rise in unemployment since the Great Depression. Also supporting these metals, reports from China or Chinese research houses the commodity traders are hoarding tangible assets. Metal companies got cheap virus loans from banks and they seem to have piled money into commodities, betting on a price recovery that is more profitable than their production activities. Last week, the War of the Worlds, or this virus blame game between the U.S. and China temporarily saw offshore Chinese renminbi, or the Chinese yen, to spike 7.15 before easing to the current 7.10 level. Whether the hoarding is also driven by speculation about weaker currency or other economic developments remains unclear. This emerging behavior has to a certain extent been supported by the recent price action, which has been seen demand for some metals being stronger during the Asian trading hours. HG copper reached an 8-week high on Monday of $2.43 a pound before running out of steam. News from China remains encouraging, with the PBOC promising to do more to support the economy, together with recent drops in inventories monitored by the Shanghai Futures Exchange. The outlook, however, in our opinion, remains one of caution. Rising supply from reopening of virus-hit mining operations, raising the question whether the pickup in demand, especially from Chinese manufacturers, will be enough to avoid building surplus stocks this year. With this in mind, we remain skeptical that HG copper will be able to mount a sustained rally above key resistance at $2.50 a pound area, an area provided the support for 3 years before March break collapsed to £2. Hedge funds have held a net short position since January, when this virus outbreak became known outside of China. Continued strength will attract additional short covering, but with the macroeconomic outlook being challenged, a sustained technical breakout is required for a long position to emerge. So here's the silver managed position, or money position. So you can see silver, meanwhile, has enjoyed the tailwind from the rally among industrial metals, having reached a historic discount to gold on March 18th at 127 ounces of silver per ounce of gold. The semi-precious metal has since recovered to 110, the lower end of the established range. The technical setup following last week's price action looked promising, with the gold to silver ratio pointing lower, while silver has made an attempt to break recently established downtrends. In terms of investment flows, there has been a major divergence between the tactical trading firms like most hedge funds and lower and longer term investors, both retail and institutional, using exchange-traded funds backed by silver ETFs. The commitments of traders reports covering the week of May 5th showed that hedge funds, spooked by the near 40% collapse from February to mid-March, have now cut bullish bets on silver by 85% since February to an 11-month low. Apart from the small dip in March, ETF investors have been continued buyers of silver ETFs since January. At this stage, it's still too early to conclude that silver has gotten enough momentum to capture more of the lost ground, but both against the dollar and against gold. For that to happen, the metals first need to break below the 109 gold to silver ratio, or $16.50 an ounce. The April high of 61 or 61.8% retracement on the February to March sell-off. So I definitely still think both these articles are bullish on silver, and I definitely think that the gold to silver ratio is going to correct sooner than later, right? Some speculate it could keep going higher. Some speculate it could keep going lower. I definitely think we're going to see gold and silver going lower, or silver starting to outperform gold. Silver has just as much, if not more potential, more opportunity, more beneficial factors in the everyday world. And as the economy starts to open back up, as the society starts to ease back into their everyday lifestyle post-virus outbreak, I think we're going to see that silver demand start to pick up as well, and who knows where that could lead prices. So anyways, US dollar or silver, place your bet. What do you think is going to be the outcome? The dollar, we're $25 trillion in debt. We know this. The dollar's losing ground quickly. So if the dollar is going to be devaluing itself, that means silver is going to be picking itself up, which is very, very, very good thing to hear, because that means extremely high price is extremely bullish for silver. Anyways, I hope you enjoyed these 2 articles. If you did, if you thought they were educational, informational, or just entertaining, make sure to smash that like button. Subscribe if you're new. I post daily videos. Expect more videos coming today as well. This was Silver Slayer. I'll see you guys soon. Peace.